everybody, happy Sunday and welcome to episode 3 of the Stock Trading Pit. We have 4 segments to go over today. Segment 1 is going to be talking with traders as Dan and Tanner Cummings go over how Tanner got into the markets, his experience so far. So if you're not familiar with the name, ChartingOptions is his handle on Twitter. Segment 2 is going to be the broad market recap as we go over SPY, QQQ, IWM, and VIX. Segment 3, I'm going to be going over finding an edge with Anthony Ohayon and talk about his process in finding stocks, and then how he really transfers those ideas onto the chart for entries and exits. Segment 4 is going to be the weekend chart requests. We have 7 to go over, so sit back, relax, and let's get started.
Hi, everybody. Welcome to Talking with Traders. And today I've got a very special guest today with me, Tanner Cummings, or you might know him on social media as ChartingOptions. Tanner, thanks for being here today.
Yeah, Dan, it's awesome to be here. I appreciate the invite. Not every day someone hits you up and asks to bullshit about trading. So thanks for having me.
I love bullshitting about trading, and we're really grateful to have you on here. So thanks for coming on. So let's jump into it. First question for you. And I ask everybody this when I kick off an interview. How'd you get into trading?
Oh man, what a story. In a sense. So as a kid, grew up very, very much so deep in numbers, both in school, obviously, but even from like a statistics standpoint with sports. So I grew up athletic by nature, and I grew up really obsessed with baseball statistics and even football statistics. So obviously various things that are calculated based off of whatever may go on during a game and then throughout the season. So through that kind of just grew into going through school, liking math and obviously other forms of statistics. And then into college, I studied stats. I want to say about maybe early in college, I got involved in investing, just obviously your standard investing where we're buying a stock and sitting in a position, or the intention is to sit into a position for a while. And through that, I found Twitter. And then as I found Twitter, I really got introduced into trading and how people trade and so forth. And during that time, I actually went on to grad school and ended up getting a master's degree in statistics. So while this is going on, it's really aligning. And then so from like which is really opposite in a sense, but from a technical standpoint, I really learned that side of trading first prior to really getting into trading. So like statistical indicators and so forth. So it really just grew out of my love for numbers. No real big story, but friends in college, and then it's kind of just grown from there. And it's really taken off into quite an obsession at this point.
I think most of the best traders out there are the ones who are just obsessed with it. Right? Yeah. You know, it's not just a hobby or a job, but it's like a way of life.
Totally. And I think you can apply that to all of life for sure.
Absolutely. So when you trade, I presume you mostly trade options. Are you more of a day trader or a swing trader? Do you tend to stay in things for a while? Tell me about your style.
Yeah, so I do mainly trade options, though. I do also dabble in buying equity, for sure, especially if something is extra volatile and a low share price. But I consider myself more of a swing into potentially a position trader, just based off of my style, which is more following an active trend. So if a trend like wants to run for a while, I'll sit in a position for a while. So maybe that swing will become more of a steady holding. But day trading, I am a trader, so I mean, the allure of day trading is there, and I do certainly dabble in it. But I would say that'd probably be third if we were lining those up between the three.
How do you know, or like, what's your criteria for choosing to trade the options on an asset or to trade the asset itself?
So I think ultimately it really depends on kind of the option or the option volume itself, and looking at is this ticker specifically option attractive, I guess, so to speak, if you want to say so. So if let's say open interest is really low and maybe volume is really low and the share price itself is really low, so swings of 50 cents to $1 or high percentage share price swings, those may be more of a holding where I would rather be in equity as opposed to an option, so to speak.
Okay. Do you tend to focus on micro caps or some of the bigger names?
Definitely, I mean, anything under the sun. So as a trader, if
Okay.
the trade is there, I'll take it. So I don't really discriminate in that sense, but I would say definitely more so focused on bigger names and larger caps for the most part.
Okay. Do you, I'm just curious, since we're
Yeah.
talking about, focus areas, do you tend to focus on like biotech or any particular sector, or are you one of those guys, and I'm kind of one of them, where you don't really care, like I'll trade anything?
Totally, Dan. So like I said, anything under the sun. The sector, I mean, obviously sector is important in the time, and being mindful of kind of where the money potentially is at, just on a larger scale of the market itself. But yeah, it really doesn't matter. I mean, I do love to catch the momentum of like, well, for example, EVs recently, or even cannabis recently as well. So
Yeah, I love the cannabis world right now.
yeah, oh yeah,
So,
yeah, definitely. Yeah,
all right,
I love
cool.
it going into 2021 too.
So I noticed on your Twitter feed, you post a lot of you post some TrendSpider charts, which is great, but you also post a lot of our good friends at Cheddarflow stuff. Do you use
Oh yeah,
Cheddarflow?
yeah. So there are many ways I'll take a trade. Ultimately, I love to work from chart to money flow, ideally, maybe. And so if I can see a chart that I see and options flow or what order flow that comes across the cheddar flow screen matches, that's awesome. But sometimes I'll work backwards. So if a ticker catches my eye on cheddar flow, whether it's something I don't see a lot or whether it's repeated activity, for one side or the other, I certainly will then work backwards and look at the chart. And if I like the chart, I'll take a trade that way too. Sometimes if it's obscure enough, I'll start a position really with just fleetingly looking at a chart. Chart flow is awesome.
Yeah, I love watching abnormal options activity.
Yeah.
It's like a clue, right? And if you follow enough clues, you'll get to the answer.
Exactly.
Do you use any indicators or anything like that on your charts when you do chart?
So for the most part, I'm very within the chart. So there's two. I mean, price action and candles really tell you everything you need to know in terms of my opinion. But there are a few things I'll look at. So obviously, there's two key moving averages I like. It's the 8 and the 21. Specifically, I use the EMA. And then outside indicators, I definitely pay attention to volume. I'll look at RSI, the MACD. I'll pay attention to volume shelf. So getting an idea of where, which is obviously something that's big with TrendSpider, and I really appreciate just getting an idea of where that kind of money is holding or potentially might want to leave at some point. The areas of support and resistance potentially. So yeah, so not too much. I don't get too fancy.
Yeah, it's always good to keep things simple. The volume shelf is one thing that's just changed my world, right?
Yeah, totally.
It's it's so simple and logical, but so few people are aware of its existence, right? I found that to be very, very useful.
Definitely.
So I'm curious, when you look at, you mentioned RSI and MACD, do you use those for divergences, or how do you use those indicators?
Specifically, really just for that. Because I'm more of a swing potentially into position trader. I want to catch the momentum. If I can catch it early, that would be great. So if those are diverging positively or negatively, depending on what way we're trading, those can be definitely pieces of the puzzle, like money flow, right? To just kind of help build an idea of what could happen, because ultimately we don't know.
Yeah, I totally agree. You mentioned which way you're trading. I take it you sometimes go short, probably with puts.
Yeah, totally. Not often, and I especially right now, definitely not right now. But there's certainly ways to win on both ends of the spectrum. So I don't ever close my mind to going short.
So I hear some traders always, especially the bears, right, talk about how there's more money to be made on the short side. And it seems true, but infrequent, right? How do you know when it's time to go short or time to go long? Do you look at like relative strength, Or what's your kind of way that you do that?
So so one of the kind of the big premise of my strategy is focusing, like I had mentioned, on two moving averages, which are the 8 and the 21, which is kind of, it's long been a strategy, but it's most commonly used by Scott Rudler, who's the man. And it is certainly, or it essentially captures, maybe not just the beginning of what could be a trend. So if we're going to lose those moving averages, whether we lose the 8, and then if we go ahead and lose the 21, it may be time for me to think about potentially going short.
Okay. Is that also how you decide like when to get out when you're long?
Definitely. Those are not only, yeah, they're points of stops, but potential points of entry too. Yes.
Got it. Do you ever so I don't have the cojones to do this, right? But some people I know who are better traders than I do. Have you ever flipped from long to short? Instead of just getting out, but actually reverse your position?
So if I'm in a swing and it's working really well, and we may be settling down in the position and it gets really extended, but I think it still could have more, I may buy an at the money put, maybe whether it be weekly or maybe a couple weeks out, just to maybe capture drawback.
Okay.
But you're really getting fancy there, and like you said, it's really, really tricky to do. So ultimately no, but that's there possibly.
It's a good answer. I actually would never advise anybody trade that way. But it's fascinating. Okay, cool. How do you so in options, one last question about options, because this is what always makes it hard for me. I'm mostly an equity trader. I don't really touch options at all because the time decay destroys me every time.
Of course.
I may be right about direction, but wrong about timing. So I'm curious, how do you know when to close out an options trade and just throw in the towel on it, right?
Yeah, it's a great question. So I mean, I think that ultimately comes down to the intention going into a trade, and it speaks to the importance of having a plan prior to a trade. I ultimately it really based off the price action, and specifically certain indicators with specifically with those two moving averages that I talked about. If we are running through an active uptrend and say we lose the 8-day, that for me is a signal, hey, maybe we can take some of this trade off. Maybe we take all of the trade off if it was a high volume red day. And then obviously if we go on to lose the 21, that to me totally breaks the active, what we call as an active sequence, and the active uptrend, and I would completely take the position off at that point.
Okay, that makes sense. So curious, what and feel free not to tell us, but what sectors or symbols are you kind of watching going into next week and for the rest of January and into February?
Okay, so short term, I really like the charts on some of the LiDAR tickers, which is essentially an EV spinoff, the technology for autonomous vehicles. So I think MViz, Luminar, which is LAZR, and then VLDR, which is Valideer. And then there's even a bigger cap, which is it TDY? Yeah, I believe it's TDY. And ARC actually holds that. That's getting ready to move out of quite a big base if you look at it on a higher time frame. So I think short term, I really like the way the LiDAR tickers are looking at the moment.
Yeah, they're interesting. I had a great trade on Lumineer before it became Elzar, right? When it was like GMHI or something like that. And that was wild. I just looked at it, I was like, there's nobody left to sell at that point, and it just took off, right? So
awesome. That's a great trade.
Yeah, that was a fun one. So okay, cool. Well, let me cap it off. I got a few more minutes left on my clock here, and I got one more question for you. Cool. And this is my favorite question. And it's a question I ask everybody at the end of their interviews. What advice would you give somebody brand new to trading?
Yeah, so I've cheated. And I've obviously seen these videos, so I was ready for this one.
Okay.
So I have something that can kind of be applied right now, and then something that we can all strive to work towards. I'll start with the former first. I think as someone that is very chart based myself, I think a lot of times traders obviously they go hand in hand, but I think a lot of times traders don't broaden their time frame or narrow their time frame. So I think I challenge everybody when looking at a chart to so say you look at a daily chart typically, I challenge you to then expand it. Look at the weekly, look at the monthly, go down from the daily, maybe look at the however you have it set up. So whether you're looking at the 4 hour or and then the 2 hour, or whether that's that would be what the 100 what is it?
2 hours,
TrendSpider has it
120
as
minutes.
yeah, 2 hour, yeah, but TrendSpider has it as 130 minutes, and I know some platforms do as well, all the way down to the 15-minute and then the 5-minute. I think it gives you a very, very good in a different perspective of what a chart may potentially be ready to do. And then my second kind of one thing that I think often gets overlooked with traders is new traders, and I fell to this myself. We want to learn about trading right away, and we want to learn as many things as we can, and we just dive in, and we're just focused on like different aspects of trading itself. But I think the really good traders, and especially the ones that are successful in the sense consistently successful and go on to potentially feed their families from this, they focus more on the trader, and then the trading comes. So I think developing the traits that are necessary to being a profitable trader, discipline, patience, and is absolvement of greed, mindfulness, all of those things that we really can apply to life. I think that's super, super important. And something that's often overlooked as a trader, especially if you want to bear down and do this for a living. Those
I
are
agree with that.
critical.
Humility is
Yes.
something that a lot of traders really oscillate around. I found, it's either it's like you're bipolar, right? You're either very high and kicking ass and loving it and bragging on Twitter about your awesome winning trades, right? But then you're not having a great week the following week, and you're morose and kind of quiet and reclusive, and being able to stay steady instead of this up and down thing, that I think is an important skill to learn.
Completely. Yeah. Control of emotions.
I'm curious. You mentioned in the first part of your answer there to zoom in and zoom out. I've heard a lot of when in doubt, zoom out. Why do you recommend people zoom in?
Why? I guess I don't necessarily have a preference on one or the other. I just think it is important to get an idea of maybe everything or every nuance of what potentially could be going on. So like, and I know some people more focus on day trading. So you may be worried more about capturing a much smaller move at a smaller time frame. So I don't necessarily, I do like that. And that is cliche for a reason. And I do enjoy probably taking a deeper peek or more of a step back than a step in. But I think there are certainly benefits to doing both, depending on how you trade.
Yeah, I mean, I do it, right? I go down. I won't go lower than the 15, but I often will go down to the 15, especially if something is pulling back against me and I'm getting nervous, because you'll be able to see divergence early, right? Like bullish divergences early on the lower time frame, right? And then that gives you a clue as to what may happen on the broader time frame later. But I was just curious as to why you recommend that, because that's not a recommendation many people give.
Yeah, it's just another piece of the puzzle potentially. You can never have too much info.
Well, cool. Thank you for being on here. We're running up against time, and I'm going to get yelled at if I don't give this back to Jake in a minute here. But Tanner, thank you. It's been a pleasure.
Likewise. Yeah, thank you guys.
Alrighty, let's look at the broad markets into the end of January. And I have to admit, I mean, it's kind of weird how similar this week's Friday was and then last week's Friday was. If you look here from last week on January 15th, we had this red candle, but we had a green raindrop. What happened after that? We absolutely ripped to the upside. What happened on Friday? Well, we had a move down, but we had a green raindrop. So 2 weeks in a row, we've had red days on Friday, and then we've had green raindrops, actually showing that volume is really showing that buyers are really in control. So if we zoom in a little bit, you'll see that on Friday, we had quite a bit of volume at the top of the range. And to me, that tells me there's still conviction by buyers. We are kind of at the near the top of this channel. Now, if we go to QQQ in a second, you'll see that the Qs have already made the move. So is this going to be lagging behind the Qs as usual? We'll just have to see. But on the weekly side of things, this is about as tight as you're going to get. when it comes to an ascending wedge. I mean, we are right at the apex of this ascending wedge. And if you don't have time to watch the charts all day, you simply just go create an alert at each one of these lines. I'm going to do a breakthrough. So whenever the price breaks through this upper line on the 30-minute chart, let's put this for 5 days for next week, create an alert, do the same thing on this side. Now I don't have to watch all day the SPY chart to see what's happening on the weekly side of things. All I do is I create these alerts, I set them, and now whenever the price breaks through either one of these sides, I know that if we're either breaking to the upside or breaking to the downside. So this is a really nice feature on TrendSpider. Sensitivity is also a great feature, which I'll go over here in a second. But I really want to highlight the alert system because this really makes the whole process of watching your trades and just your charts a lot more efficient, especially when you're getting towards the tip of a wedge, a triangle, anytime where you're going to have a make or break situation. This is the time to really use these alerts because that's really when you want to know what's going on. Into the Qs, we had a really nice breakout. We pretty much had the same channel that we had on SPY. Looks very similar. However, we already broke out here. So you can see here, what was this, on Tuesday, we had a nice breakout, volume supporting the breakout, and then a continuation the next day. Friday was a little bit of a pullback, but still you can notice that there's quite a bit of volume at the top of the range here, which tells me that, you know, there's buyers in control still. Now on the weekly side of things, we did move up really strong and we didn't quite get to this 1.618 extension. However, this would probably be the target into next week if we continue to the upside, and we'll just have to see what happens. But really nice breakout here on the daily side of things, and just a really nice move to new all-time highs on the weekly side of things. Now, if we go to IWM, IWM's another interesting one for a couple of reasons. One, we are in this pretty big ascending wedge here, and we're just kind of, we're not nearly as close as we are on like the SPY ascending wedge on the weekly, but we're getting close. It's starting to get a little tight up here. And this has just been continuing to grind higher pretty much each week over the last couple months. Now, on the weekly side of things, this is where the sensitivity alert would have come into play big time this week. You can see here that we have this 1.618 extension. If I have it like this, it almost looks like the price touched this line. If we zoom in, you'll see that we did not actually touch this 1.618 extension. This is a classic case of right-clicking, create an alert. You've got your sensitivity here and boom, you have an alert set, even though the price didn't get to that exact price point. So if you are someone that wants a little bit of margin of error around these areas, this is definitely the way to do it using these sensitivity alerts on the platform. And this would have been a nice way to get a little bit of an idea of if we were getting close to that 1.618 this week. So overall, just continuing to grind higher. This has been an incredible move on IWM. And we'll see if it continues going into the last week of January and early February. Now, the last one that I'm going to go over, as always, we're going to go over VIX. VIX is interesting, and I want to point this out. So obviously, we're hitting higher highs on SPY, but we actually have a little bit of divergence on VIX. And this is something, I guess, worth noting. So notice here in late November, early December, we had this low. I was going to say all-time low, but pretty much the lowest low we've had since the March spike. But you can see here that we're hitting higher highs on SPY and we're hitting higher lows on the VIX. That's something worth noting, at least just overall. You know, you take it for what it is. But it is interesting to see that VIX is not hitting lower lows as SPY is hitting higher highs. So keep that in mind. We still have this gap below. We also still have a gap above. And, you know, this chart's really not going to change until one of these two gaps fill. And there's really no reason to change it because these are the two areas you definitely want to watch. Now, you know, that is something that could take weeks to fill, either one of them. As you probably have been watching over the last couple of weeks, this has been a chart, even over the last couple of months, we've been looking at this gap below and it just cannot fill. So we'll have to see what happens. Generally, whenever we have this type of candle on VIX, there is a pullback the next day. Now, not always, but anytime you have one of these solid candles, and remember, the solid gray candle means that we closed higher than the previous day on Thursday, but the open was way up here at 2290 or so. and then we closed way down here. So remember, if you're looking at these hollow candles, the hollow candle, either a red hollow candle or in this case, it's a white hollow candle because of a white background. It's like opening the shade. So your open is on the bottom, your close is on the top. So you're opening up that window shade. Now on the solid candle, your open is at the top, your close is on the bottom. So it's like closing the window shade. And that's kind of how to look at these candles. And so let's see if we get a continuation down next week. As I mentioned, the SPY ETF SPY is really getting tight up there, and it's a make or break move. But the fact that the Qs already broke out tells me that SPY may be lagging and we have more upside to go. So that's the broad markets. Hopefully everyone enjoyed this. If you haven't tried out the alerts, they're really crucial, especially around this time where we are starting to break out of some pretty crucial levels, and you want to know that and not have to stare at the chart all day to see that happening. So let's move on to the next segment, and let's do it. Alrighty, everyone, into the segment Finding an Edge with our special guest, Anthony Ohayon. Anthony is probably one of the fastest growing names on FinTwit, an epic stock picker, and I'm excited to have him on and kind of go over his process, how he finds these plays, but then how does he apply the charts once he has found these names. So Anthony, if you want to introduce yourself, tell us a little bit about your style, how you really got into trading, and we'll go from there.
Yeah, absolutely. Thanks for having me on, Jake. So yeah, my name's Anthony, and I've been trading since I was about 15 or 16, and I've kind of ran the whole gambit through penny stocks and high risk weekly options to just shares and everything. And now I pretty much do a mix between investing and trading. So I like to go and find really good companies that have these great fundamentals that I would invest in, because one of my big rules is I never put money in a company that I would not hold for a year. So just that way I weed out all the bad trades that can be pulled by FOMO or whatever, what have you in the markets. People just want to get into random runners. And then of course I always wait for the good setup. So I don't just buy things that are running because they're running. I like to wait for things to pull back to a good level to get into, because that's a huge part of getting into a stock. It's like that risk reward level really depends on when you get in. So, and when I combine those two, I find that a lot of the trades get a lot easier. And honestly, since I found TrendSpider and I've been able to incorporate that anchored VWAP, which is probably my favorite thing on there, I mean, it's been a lot easier. So big shout out for that. That one program is the best.
Awesome. Thank you. Hey, big shout out to Brian Shannon for kind of evangelizing that to me. And I was able to kind of, show it off from his mentorship. But, so before we jump into the charts, are there specific, without kind of sharing your secret sauce, are there specific things you're looking at? Are you looking at disruptors in a specific industry? What is kind of that first layer on how you find those stocks? And then from there, kind of filter them out into the chart side of things.
Yeah, I'd say the first thing I look at, which is just like natural to me, if I'm not interested in it, if it doesn't get me excited, I really don't want to put my money in there, because I figured a lot of people wouldn't be that excited about it either. Even if it's a great company that does fantastic revenues, fantastic profit margins, like Rocket Mortgage is something I don't understand on the market, right? It's like a $20 stock and they're crushing their profits, then it's not at $50. So it must not excite people. It doesn't excite me. And so I don't trade it, even though it's a good company. So it's got to have that excitement to me first. And then I always look at the market cap, because I go for growth. Like I like to go into high growth stuff. And I've been doing a lot of SPACs recently, specifically because you can get in at valuations on these good companies that are really, really attractive. So usually, Airbnb is supposed to be 68, opens at 150. You can't get in on that until, it's too late. And that value is already stretched. Like that arbitrage you could get is gone. So I've been doing that a lot with the SPACs recently. And I love to find an edge there, because all these new innovative companies are coming out and they don't IPO at like 50 times sales. It's 10 times revenue, or, 5 times next year's revenue, whatever it is. They try to find attractive deals. And I pretty much use that for all the names I'm investing in. So that's definitely the huge key factor for me, is if it's a huge market cap, I can't, it's hard to get a 10x or a 5x or a 3x on a stock that's 500 billion. So I look at low market cap that's growing really well. So I want to see like 50% revenue. I want to see that their profits are happening in that part of the business, but not necessarily because they're profitable. They could be throwing money into R&D, and I want to see when companies are trying to innovate and expand. So I'm huge into the space sector, the new medical imaging, life sciences, all the stuff that I know is going to be the next 5 or 10 years future of the markets is pretty much where I'm putting all my focus at.
Makes sense. And when you say low market cap, some people think low market cap, they're like $1 million market cap. Some other people think, 10 million, 10 billion. What's kind of the lower threshold on a market cap that you kind of are looking at rather than, maybe where you think it's going?
Yeah. So, I mean, I've kind of looked at it statistically. So after 150 billion, stocks stop on average going at a rate that I want. So it's under a certain threshold of returns. I know it's possible. Like I know some stocks can go from 1.5 billion or 150 billion to like 1.5 trillion. It could go really 10x there still, but that could take 5 or 10 years. And I like to look for things that can run faster. So, a lot of these stocks recently have been coming out in like a $1 to $2 to $3 billion valuation, and they're doing pretty good revenue, pretty good sales, especially the SPACs, because those are the ones that come out at cheaper valuations because of the way the SPAC's done. So kind of like that, I think 10 million or 10 billion at the top is when I start saying like, hey, like how much more can this really grow? If it's killing it, and something like C Limited, which was 10 billion, but obviously is now like 130 billion, just really crushing it, then, that's a different story for me. So I want to see that story continue. And it's just more about value and like attraction. So if it's an incredible name with a great idea, no revenue, I'll still probably own it if I believe in the story and I think it's going to happen. Like Nanox, for instance, is one that I feel that way about.
Got it. Okay. Makes sense to me. Well, we have a general idea of kind of the process, at least for finding these that would end up being on a chart. Let's go into looking at the charts and how you're looking at the different indicators, especially I know you using TrendSpider, some of your favorite ones, and we'll take a look at some of the ones you're checking out right now.
Yeah, absolutely. So I'm actually really excited to talk about some of these names. Like for example, is now like the biggest winner we've had so I have a podcast called Pounding the Table. You can check it out at Pounding the Table on Twitter. And we've been pounding this name a lot because a lot of people are all over the EV markets. They're all over these electric cars, these magnet makers, battery makers, but people weren't really looking at the other types of things that could become electric. So, obviously autonomous vehicles are becoming really, really huge. And in the sky, there's not many exist at all. So this stock Ehang Holdings, passed all my fundamental checks. I was actually looking just on like Simply Wall Street, and I found that it was in the Discover tab, like a really high growth stock, but no one really was talking about it. So I did some research, found that they got this approval back in May to be the first autonomous air taxi in the sky in China, which was very cool. And no one else was doing it. So passed all my fundamental checks. And I noticed on the chart here, it had this huge long base. For a long time, it really wasn't doing much. It's actually funny. So I set these alerts with the anchored VWAP. So I have multiple anchored VWAPs set. And it depends on how much it dives down, which is like how much I buy. So if it's a pretty decent dip, I'll add a little bit position. If it's a great huge dip, it's like, I have this texted to me where it says sell everything and buy so I know that that's a really good level to buy it. But basing here forever finally broke 14, and then I think FinTwit and the rest of the community got a hold of it because people were probably looking for those EV names. But now it's obviously gone extremely parabolic, which worries me to some degree. But still, when I found it was extremely undervalued. So I'm actually not selling it in my position. I'm looking to actually buy more if it gets much lower because this run had happened too fast. But I actually was able to add along the way a few times using this anchored VWAP. So I'll look for the day right behind the move of the stock. So I kind of break it up into chapters. So this little base chapter here for a long time was, the story's just getting started. Nothing's really happened. Then it starts getting taken notice of. And so that's a different chapter. And so I like to think of it like that and put the anchored VWAP right behind that point in the chapter. And along the way, you can obviously see there's different chapters. So this is all pretty similar in that little, you could draw a channel here. And then this just started going parabolic. So of course, another chapter, and I'll set another VWAP. And what I really like about the anchored VWAP is that stocks come back to that regression line all the time. There's huge institutional and, retail buying here, which over time needs to distribute and even out. But what is cool too is that this can trend up. So if the stock keeps going higher, this can just keep going higher too. And so just because this is way lower doesn't necessarily mean it can go down right away. This is just an actively moving and changing equation that just charts a plot right here, which is very cool. And that's why I use it so much.
I love the fact that you use the sensitivity alerts on the anchored VWAP, because a lot of people, I think this is one of the biggest fallacies in trading. I see these people, they'll post support and resistance lines like, oh yeah, next resistance is 52.38. And it's like, where did you get that from? I get that you got to have some type of base point, but the fact that you're using these sensitivity alerts allows you to kind of show that, you're not going to always hit this point precisely. It looks like there was a couple times on that Anchored View app from, I guess your original Anchored View app, what is that? Early January, where you probably missed it by a few cents, maybe $1 on that kind of hammered looking thing. So being able to use that sensitivity really allows you to have a little flexibility there.
So the funny part is this is exactly where I doubled down my position at this. I got a text that said, sell everything by EH. And I doubled down my position right there because I had this little feather, which is really, really great. I mean, I always joke about this. People on their charts, they're like, well, if it breaks this level underneath, it's going to go to zero, whatever. Like they're freaking out because it's like a huge support. But a lot of the time that gets bought right back up, and then it really starts the trend. Like if you look at the markets, like over time, that's been some of the biggest moves it's ever had. Like the Nasdaq itself is times like that. So it's definitely an indicator to look at, which is why you set those feathers.
Mm-hmm. Yeah, no, it's definitely something that allows you to have a little margin of error, because at the end of the day, things don't work out to the exact penny. People go too leveraged and they get stopped out. People go too leveraged and there's no liquidity above, and they end up buying a spread that is like 3%. They don't realize and push the price down. So, this allows you to have a little bit of flexibility there. So EH was a massive winner for pounding the table. So big congrats to you guys again for that trade, and a few other ones that you guys have really been in. Now going into, maybe what charts do you look at to get an idea of the strength or relative kind of strength of the market? Are you looking at SPY, the Qs, IWM, or is it a mix of everything?
Yeah, it's definitely a mix of the three of them, because I think it's really an interesting time in the markets right now where you've got a lot of tensions from COVID, from political factors, and of course the Fed and Congress stimulus and rates and all that. So it's a lot of rotations that are happening in the markets versus just like complete just upward breath. It's, we're rotating from big tech into growth, like into small caps that are like, the Carnival Cruise Lines and airlines. It just kind of rotates itself. And you've seen that IWM has gone absolutely bonkers since the election, which has happened for the last 4 elections. So that was actually my biggest trade of last year, was the IWM. I bought leaps on it at 195 strike for 2022. And those were like $2. So I'm actually still in a lot of those because COVID got benefited so much because of the stimulus and all that kind of stuff, so that these names are just pumping now, and you got the liquidity, you got, the Federal Reserve buying these bonds. So I really look at SPY a lot first, just because I think most people know that that's the one. That's like, everyone talk about the market, it's S&P 500 is doing this and that and whatever. But once again, I draw it into different chapters, right? So I have this first initial trend line over where this was at first a pretty big level, and then of course it spiked over. And this was just based on, I did a measured move target here, but then I do anchored VWAPs from each of the big significant chapter changes. So, this was a pretty significant dip for the last few weeks there. And it's crazy how much this has happened in such a fast amount of time. So a lot of this stuff has to be, you've got a lot of chapters in a small little book here. So you see how these these touched perfectly, which is why I was able to, flip from short to long here. And that's usually where I started. So like my big breath of the market is, are we bullish? Are we bearish? What kind of policies are impacting it? And then the day-to-day is more like S&P 500. Is that the one that's moving up today? Or NASDAQ, is that the one that's moving up today? And they're selling the rut and they're selling the S&P 500. So that's usually how I gauge the overall sentiment of the market. And I think what's really nice is that you're seeing less and less huge rotations and more just steady breath amongst a lot of different things. So I'm actually quite bullish on the markets. I'm sure we'll have some dips along the way, but I'll just refer to the different little chapters to tell me when to buy.
Yeah. And, it's always funny because I'm very bullish on the markets right now too. And not because, I think the economy is in a great area, but the stock market is not the economy. And a lot of people always compare those. The move down happened in February, March, because there was a liquidity crisis. Essentially, it wasn't because, and there was uncertainty in the markets. But at this point, there's nowhere else to put your money. You're kind of forced to put it into the market to get some type of yield on dividends or, anything like that, where you're not going to get that in some type of fixed income vehicle. So it's always interesting where, I'll post something bullish and, just my thoughts on us going higher, and people are just so emotional about it. And anytime I get emotional responses like that, I know we only have higher to go, because you have these people that are still so trying to be the next Michael Burry, big short in the market. And it's like, okay, well, we still have more room to go.
Yeah, and the Federal Reserve just said like a week or two ago, which is what happened. All these huge move happened by a ton of these growth names like SE and Mealy and Etsy, Fiverr, is because Fed's Evans, on the board, he said that we're probably not going to raise rates until 2024. So that's like a huge thing, for those growth names. That just kind of extends that rally a little bit longer, because we were first thinking 2022, 2023, and now it's like mid 2024. It's like, yeah, okay, like let's add some gasoline to the fire.
Yep, absolutely. Now, as far as IWM goes, we do have an interesting candle, and we've kind of just continued to grind up. Is this something that you're looking for a potential, pullback, maybe just mean reversion to that anchored VWAP from kind of the breakout there from, what is that, the March highs?
Yeah, from the March highs. I mean, it didn't even trade below the March highs. It opened right at them or right over them and just kept going. So I was actually quite bullish on IWM right here. This is when I had those 195 and 200 strikes for January 2022. And I've been actually accumulating them on all these pockets. So I just highlight when things are stalling. And what's actually interesting is that IWM was the indicator for the overall market bottom. This one bottomed out first before the other names, which makes sense because it got hit the hardest. So when the pain stopped there, it was just bound to stop in the other names. And then tech benefited so much. So it's hard for me to think of a pullback in tech because they just happen, and like it can just go parabolic for so much longer, versus I know that a lot of the companies in this are not going to make money. I know that there's a bunch of banks in here that are still not going to make money. There's a bunch of small cap names that are in that retail, industrial, consumer sector that are not going to make money. So this is artificial. I fully believe this is artificial, but the tech, the tech runner, it's hard for me to stop the run there because I think that is justified. It's just, you sped up the time of innovation by 5 or 10 years. And so this doesn't make as much sense to me. This was just a play based on elections in previous times. But I would not be surprised that it does pull back to this, the beginning of this crazy chapter here. Because that's just, no one planned for that move. I had no idea it would do that. I thought I'd maybe get a double or a triple on my calls. And they're like 15x now because it just keeps going.
Nice. Yeah, no, it definitely is kind of, I think, thrown a couple of people off guard. Now, so we went over the broad markets and kind of how you gauge overall strength based on that. Mm-hmm. Is there one that you want to kind of end this with to kind of have people think about maybe into the coming weeks or months or that type of thing?
Absolutely. So, I mean, I was not going to talk about this name today, but now I have to talk about this name today. So this is one of my favorite names, just the potential here. I mean, this company, for the valuation standpoint, right, this kind of goes against what I was saying earlier, but it's that one little caveat to where if the company has the potential to change the world and do something really incredible, and it's not really expensive and not being paid a premium of it, I'm going to be in that name because I believe that most people can get it done. And I believe that the team on this name can absolutely get it done. Mm-hmm. So I actually got into this name right at the IPO, like the first day. So I've been up on it the whole time since I've been in it, but it's definitely driving me for like a roller coaster here. So this has been obviously a really, really long road there. But it has these really, really clear levels. So, I mean, these levels just came from me drawing. So I'll do this sometimes. And I like to draw it over because then I can just lace it over with the line. So this obviously changes. So I like to update this a lot. But this level has been super, super strong. So I've been accumulating here because this also touched the feather, right? Like it never touched the actual line once again, but you put the little, the little touch on the outside and it can always kind of hit it for you and then give you a text, which is insane. And that's actually still like, I'm amazed by that because I'll just be like on my phone sometimes on Twitter and then boom, I can buy something, which is great. But it has a lot of nice things that I look for. It's got this pennant formation that was coming here. You can kind of see it there. So, and if I draw another one up here, it'll kind of act the same. And then it just decided to start taking off. So I knew that this was going to happen because ARK, their Israeli fund, said that it was going to be buying a bunch of nanox. And so it's not about how much they buy. It was just about the fact that they're buying it to give it that credibility because this company is pre-revenue. They're still waiting on FDA approval in this. But I think that the fact that this can completely revolutionize the medical imaging space market is just like, it's worth it for me to be in it. And this is like another huge thing. This is probably the most bullish thing to me about it is this horizontal line, post IPO hype top always like leads to a big run in names. I mean, this is just, before this, it's just accumulation and who's buying it at what price. But once it starts breaking out of here, the psychology of the stock will completely change. And things love to run to the psychological numbers that people have in their head. Like I have a target up here of 100 on it, just because I think with all the speculation, the longs and the shorts on it, it could easily get there.
Now, I'm curious, how big of a market cap is this one?
So I think today this is about 3, maybe a little over 3. I haven't checked since it had a huge day today, so I haven't seen it. It was up 25% today. But I think right now it's about 3.2 billion.
Nice.
So yeah, not bad. Yeah, and when I look at the earnings projections, this thing's got easily $10 billion valuation written on it. Just with their contracts that they have now under, they're having these conversations with a bunch of different big guys like USA Rad, and so when that's all done and FDA approval's there, they'll be making like $1 billion. So that's very simple for me to see it. It's gonna go to like $100 or $200 based on the valuation.
Makes sense to me. Well, thank you for giving everybody a little taste of maybe your next big play here. And as always, everyone, you have to do your own due diligence. Anthony, I promise you, does his own due diligence, but that doesn't mean go mortgage your house in this play. It means this is something he's watching. Go do your own due diligence, look at the chart, come up with a plan for yourself, and then make it your own trade. I think that's really important. It's great. FinTwit is great to have, a baseline of what some of the top guys are looking at, like yourself, who do the research. But at the end of the day, to really make it your trade, you have to go in and really make those research notes and put in the hours. So thank you for making this an idea. And hey, we'll see what happens in the coming weeks and months. And I mean, like you said, you've got that IPO kind of high. And if we break that point, it's kind of on from here. So really appreciate you coming on and sharing your process, both on the fundamental and just overall interest side of things, and then how you apply the charts to that. And looking forward to hopefully doing this again soon.
Absolutely. I'm happy to come back on anytime. And yeah, it's been a pleasure. Thanks for having me. And you're, of course, welcome to come on my podcast. Absolutely. Anytime. We can definitely talk technical. Let's get technical with it.
Let's do it. I'm down. Anytime you want to do it, we'll make it happen. And hopefully everybody enjoyed this, and let's move on to the next segment. All right, let's look at some weekend chart requests. We have 7 this weekend. Last weekend and the previous, we've done 5, but I wanted to add a couple more just because it was such a wild week. I mean, unbelievable week. So we'll start with Pinterest pins. We have this pretty defined ascending wedge here. And this is what I meant in the previous segment by we've got a lot of setups here that are either going to make or break in the coming week or so. And this is another example where you just put an alert on each side and let the system tell you when there's a breakout or a breakdown. You don't have to, stare at the chart all day. And it's generally not great for your trading to stare at the chart all day. It's just easy to really get those emotions kind of kicking in when you're just staring at price action constantly. So this is another way where you can simply just wait until the pattern either breaks to the upside or the downside. Some people like to play the inside of this pattern. Some people like to just wait and see if we're going to break to the upside or the downside, and then they let the price action tell them what to do. If you have a bias, it's sometimes hard to just follow price action, where if you just follow price action, a breakout, probably bullish. If it breaks down, probably not bullish. So let the system help you and let things become more efficient using some of these features like the alert system. Now, on the weekly side of things, this is a chart that I went over with Puru in early December. And, we really haven't moved a ton since that video. We pretty much are almost at the exact same spot, maybe a little higher, but it does seem like we're starting to coil here a little bit over the last couple weeks. And if we did continue up, this 2.618 extension would be a target above, let's say around 79.50 to 80. Remember, you always want to have a zone, not just one single price point. Going into PLTR, this thing finally moved this week. Congrats to those that were holding this. An absolute ripper on Friday. And what we're going to do is we're just going to do the same thing we've done over the last couple of weeks with this chart. Anchor from this original breakout here in early November. And you'll see here that we finally broke out of this descending resistance line, this diagonal line. But what's really interesting here is we have the regular candle, but if we turn on the raindrop, What's really interesting is we had this blue raindrop right on the volume shelf and right on this previous resistance line acting as support. And then we had the massive move up on Friday. So on the weekly side of things, I mean, if we continued to move up, we would definitely have a target of this previous high, let's say around 33.50. But if it broke through that, that's when you turn on the extensions. Price discovery is in full control. And the 1.8 extension is a pretty natural area above that people are probably watching if we hit new highs. That is around, let's say, $40, give or take. And let's move on to something a little less volatile like Amazon, which has really done nothing over the last 4 or 5 months at this point. So I'll turn off the anchored volume by price here, and I'll turn it on the weekly side of things. Here's another chart where we've got this very defined pattern. Put an alert on the top and the bottom. Let the system tell you when the price action's making a move where the status quo is really changing. When I say status quo, we're pretty much in the same status quo as long as the price is trading within this pattern. Once we break out of this pattern, either to the upside or the downside, that's when the status quo changes and you want to kind of get an idea of what's happening there. Now, on the weekly side of things, we've been touching on this chart quite a bit over the last month or two, but essentially, we've got this anchored volume by price from the March lows. You can see this huge volume shelf forming, and we'll see if this finally acts as a launch pad into the coming weeks. But if Amazon, some of these other ones, Apple, Microsoft, Google, continue up, it's just going to bring the markets higher as well. So Amazon definitely, let's see if that continues next week and we get a continued move. Notice over the last, what was that, September, we haven't really had 2 solid weeks in a row. We had this in September and into early October, but even that was kind of choppy. It would be interesting to see us get this type of move again, where we just have constant melt up move here, kind of like what we saw. So will it happen? We'll have to see. This is a massive market cap, so it takes a lot of money to move Amazon and some of these FANG stocks. So keep that in mind as well. Apple is the next one we'll go over. Apple is a great case study on the fact that a lot of people look at a descending triangle like this and they look at it as bearish. Sometimes you can have a bearish descending triangle. In this case, this was a very bullish setup with a nice breakout on the 20th of January on Wednesday. And then we had a nice move up to test these all-time highs and actually hit all-time highs on Friday. And you can see that here that we barely closed above this September 2nd high. And so, to me, that tells me that this is a pretty strong market. If we're hitting all-time highs, that means that the market is really showing some strength. And if we go to the weekly candle and anchor from this March low as well, you'll see something interesting. Notice how the price action is moving right along this volume shelf. Notice how we're kind of like stair-stepping right up it. Yeah, if I can draw. And you can see that, the price is pretty much just trading right along that volume shelf. Initially, we bounced off the shelf, and this is more just volume nodes that we're kind of walking up. But we did break out of this previous area. If we did continue to the upside, the 1.618 extensions right around 160 on Apple. If you want to set it and forget it, create an alert at this area with some sensitivity, and you're set for the coming weeks or months, however long it takes. You don't even technically have to look at the chart after that. You just let the alert do its thing. Moving on to Nvidia. Nvidia is one that is really starting to show some interesting signs here. I did have an alert on both of these lines, and we did break out at least intraday on Thursday, kind of pulled back on Friday. And so maybe this wasn't a great example of when you could have gone in and had an alert here. Maybe you were in an options trade or something and just wanted to sell the impulse move on Thursday and get out and get the alert and maybe get back in. This would have been a great example of using those alerts. Now, on the weekly side of things, same thing, anchor from the March lows. We have this massive volume shelf forming here on Nvidia, and this has been really chopping around as well for literally 4 or 5 months. And, will this be finally the launch pad that we're looking for on Nvidia? AMD has earnings next week. That could definitely help push semiconductors higher if the earnings are good. And we'll just have to see what happens. But definitely a nice setup here on the weekly using the anchored volume by price. Now going into Fastly. Fastly is one that we went over on some of the weekend videos. when the trading pit was off season. And what I want to point out here is the fact that this volume shelf, if you guys remember from a couple months ago, this was our initial supply zone, and this is where we had some trouble breaking through. We moved up, we went right back down to the volume shelf, and now the volume shelf acted as a nice launch pad for price this week. Now, the question is, do we fill this gap above? And all I need to do is turn on this gap snake here, and that just shows us automatically where this gap is above, exactly where it starts, exactly how much it's filled. So if you did want to simply just be alerted when the gap fills above, right click, create an alert on the line, and you're able to essentially get an alert when the gap is fully filled using this approach. So let's see if the gap fills going into the week ahead. Decent volume within the wick today, Friday. And you can go in here and see that, there's a lot of conviction by buyers here at the top of the range. So let's see what happens going into the week ahead, and if this gap continues to fill, and if this volume shelf continues to be a launch pad. Now, going into the last one, SPCE, this one is really starting to show possibly a breakout sign here. Now, what we have is we have a pretty strong ascending triangle here on the daily side of things. You can see here on Friday, we did break out here. So if we draw a line, we have this horizontal pivot. There is a little bit of volume above that pivot point. And we'll just have to see if this continues up to test these all-time highs, which are around 42, 43. And if we look at the weekly side of things, this is a nice case study on the volume shelf. I mean, I remember going over this video like in early November and mentioning we've got this volume shelf here that could act as a launch pad. That's exactly what it did. We had a nice bounce off, and we had a little bit of a bounce here at this next little volume node popping out. Let me highlight that for you guys here. And we had a nice move up again. Very strong candle on the weekly side of things. Let's see if we can get all-time highs into the coming weeks. Space exploration, space tourism is becoming definitely a hot topic. So let's see if these names continue up into the coming weeks. Hopefully this video is helpful, not only this segment, but also the broad market segment, just to see how you can use TrendSpider to really make some of your analysis more efficient and your trading more efficient as well. So you're not having to stare at the screen all day. You can try this out for 7 days free. We really appreciate everybody who tunes in, but if you do have any questions and you're not a customer yet, just reach out to us and we're happy to answer anything that you have questions on. You can either reach out to us on Twitter, or you can reach out to us at hello@trendspider.com, and our customer success team is happy to help you. Thanks so much, everybody, for watching tonight. Hopefully everyone has a great evening and a great week of trading next week, and we'll see you next weekend.